Welcome back, Rebels. This is episode 4 of the Mentorship Mastery Program here on Intentional Trading, the channel built to transition you from reactive guesswork to intentional authorship. If you're joining us for the first time, I encourage you, no, I urge you, go back and watch the previous episodes, because every lesson in this series is an engineered brick in an architecture of transformation, and skipping a brick tilts the entire structure. This is where traders become model makers. This is where confusion dies and clarity becomes self-generated. This is where intention replaces impulse. If you haven't subscribed yet, do that right now and turn on notifications so you never miss an installation, because each episode is a doctrinal upgrade, a psychological recalibration, and a structural reinforcement. Now let's begin. Picture this. You're on the charts. Your palms are slightly sweaty, not from fear, but from a subtle internal tension you didn't even notice. The candle is moving, and you can swear you've seen this pattern before. Your mind screams, "This looks familiar. This is the same setup from last week." You click, you enter, you justify it. You believe you remember the setup, but 5 minutes later, the market does something you didn't expect. Your heart rate climbs. You reposition your stop loss. You convince yourself you have a plan. But deep down, you know you're responding, not designing. You're navigating the market with an illusion of clarity. You think you see, you think you know, but what you're actually doing is trading blind. And the most dangerous blindness is not the one you can see, it's the one you don't recognize. Today, I'm going to expose the 3 structural reasons you're trading blind and why it feels normal. By the end of this episode, your internal posture toward the market will shift permanently, because blindness is not a condition, it's a consequence of missing structure. Let's dismantle the first illusion. The myth of memory-based trading. Rebels, settle in for a moment, because this is one of those truths that quietly sits at the root of most trading failure, yet rarely gets confronted. This is where many traders unknowingly sabotage themselves, not in their charts, not in their entries, but in the silent machinery of their own memory. You open the chart, and immediately, without even realizing it, you lean on recall. This looks like the setup from last week. I think this zone rejected price before. I'm sure I've seen this exact pattern. But what you're leaning on is not structure. It's not documented evidence. It's not repeatability. It's a mental echo, a sensation dressed up as certainty. Memory is not a trading instrument. Memory is an emotional narrator. It tells you what feels true, not what is true. It gives you fragments, not facts. It reconstructs stories, not structures. And in the world of trading, reconstructed stories are dangerous, because stories feel familiar, stories feel reassuring, stories feel like clarity. But they are clarity borrowed from emotion, not from design. You believe you're recognizing a pattern, but what you're actually doing is confirming a bias. Your memory exaggerates what you want to see and hides what contradicts your hope. It feels confident, it feels intuitive, but it ends in confusion, repeatedly. Why? Because the brain itself is wired to distort. It prioritizes emotional recall over factual recall. It stores dramatic losses with painful intensity, while routine wins fade into the background. Under pressure, it compresses timelines, reshapes sequences, and rearranges details to protect your emotional state, not your trading account. So when you look at the chart and say, "This is the same setup," you're missing the structural truth that your memory simply doesn't care about. The volatility might be different. The session flow might be different. The liquidity distribution might be different. The narrative structure might be different. The model alignment might be completely absent. But memory doesn't check any of that. Memory only cares about how similar the moment feels. It matches the emotional shape, not the structural shape. And that is why traders overtrade. That is why traders misread the market. That is why traders repeat the same errors with absolute confidence. Because memory reflects mood, not markets. Here is the deeper truth. You're not recalling the pattern. You're recalling the emotion of the pattern. You're remembering the speed, the tension, the excitement, the fear, the relief. You're not remembering the structure at all. That's why 2 trades that look identical in your head suddenly behave like strangers in execution. The nuance was missing, and nuance is the lifeblood of trading. Memory distorts nuance, Structure preserves it. Memory loves shortcuts. Trading punishes shortcuts. Memory is emotional. Trading is structural. That is why the intentional trader does not rely on memory, not even a little, not even subconsciously, because memory is a myth in trading, and every strategy built on it is a house built on sand, beautiful until the storm. Some traders argue, I've been trading for years. My experience helps me make intuitive decisions. No, experience only becomes intuition after structure has trained perception. Without structure, experience becomes the repetition of emotional cycles, refining confusion, not clarity. Let me make this painfully clear for every rebel listening. Experience without structure is not mastery. It is familiar dysfunction. This is why a trader can spend 5 years in the market and never evolve. Time does not teach you the market. Only structured perception trains the mind to see what matters. Memory does not turn chaos into clarity. Structure does. Now, pause with me here, rebels. Ask yourself, and answer honestly, how many of your entries were born from familiarity instead of verification? How many trades did you take because something looked like something you think you remember? How many times did you assume you remembered your plan, but didn't? How many times did the market punish you for trusting the wrong narrator? Think, reflect. Do not rush this part. Your evolution begins exactly where your denial ends. And if you walk away with only one doctrinal truth from this entire segment, let it be this: you cannot trade what you remember. You can only trade what you have structured. Memory is the shadow. Structure is the substance. One deceives, the other delivers. If you're trading from memory, you are trading blind. And blindness always feels normal until structure reveals everything you've been missing. Journaling as a behavioral mirror. Rebels, if the first point exposed why you're trading blind, this second point exposes how to finally see yourself clearly. Let me tell you this truth up front. No trader transforms until they confront their own behavior, and no trader can confront what they cannot see. That is where journaling enters. Not as a notebook, not as a record, but as a mirror. Most traders think journaling is about documenting trades. Entry, exit, stop loss, take profit. They believe it's a catalog of events, a historical logbook. That thinking is shallow. That is surface level. That is clerical, not transformational. A journal is not there to record your actions. A journal is there to reveal your patterns. Every entry is a window into your psychology. Every mistake is a breadcrumb pointing toward the architecture of your decision making. Every deviation is a signal, not of market inefficiency, but of internal disorder. The intentional trader does not journal to remember the trade. He journals to encounter himself. Your journal is not an archive. Your journal is a mirror. And mirrors don't lie. Many traders swear the market is unpredictable, but unpredictability is not the real problem. Your unrecognized behaviors are. Most traders are trapped in a hidden cycle. You trade impulsively. You rationalize that impulsiveness. You forget the rationalization ever occurred. You repeat the behavior with confidence. And then you blame the market when results deteriorate. That loop can continue for years, even among intelligent, diligent traders, because you cannot break a pattern that you cannot see. A journal becomes the place where denial dies. It slows you down, confronts you, forces you to articulate what you would rather ignore. When you put your behavior on paper, it stops hiding behind instinct. The market doesn't expose traders, their behavior does. Journaling is the only tool that captures behavior in real time. If you resist journaling, it's not because it's boring, or because you don't see the value, or because you don't have time. You resist journaling because you subconsciously fear what it will reveal. The inconsistency, the emotional bias, the impulsiveness, the lack of structure, the truth that your trading performance is a reflection of you. Trading exposes identity. Journaling exposes the exposure. Many avoid that mirror because they are not ready for accountability. Accountability is not punishment, it is alignment. You cannot build intentionality on top of denial. Memory is emotional, partial, and selective. A journal is objective, complete, and permanent. Memory shifts with pressure. A journal stays the same no matter what. Memory serves your comfort. A journal serves your truth. Memory lets you hide your deviation. A journal forces you to confront it. That is why traders who rely on memory think they are improving while repeating identical cycles. You cannot track growth if you forget your mistakes. You cannot correct a behavior you cannot trace. You cannot refine a model you do not measure. Your journal becomes the structural backbone of intentional trading. It translates behavior into data, deviation into pattern, and emotion into actionable insight. Only then can you evolve deliberately. Think of your journal as a multidimensional behavioral mirror with distinct layers that, when used together, create a complete picture of who you are as a trader. The first layer documents execution. What happened when you entered, when you exited, the reason you gave at the moment, the target, the stop loss, and the market structure you believed you were trading into. This is the skeleton, the factual record that anchors everything else. The second layer observes behavior. Which emotions influenced the entry? What internal pressure affected your timing? The internal dialogue that ran in your head, whether you felt rushed, whether you felt the need to prove something, whether you were chasing or avoiding loss. This layer reveals the nervous system behind your actions. The third layer tests structural alignment. Did this trade conform to your model? Did you wait for confirmation, meet the structural criteria, or skip steps and improvise mid-trade? This layer assesses the integrity of your execution. The fourth layer is post-trade reflection, the transformation engine, where you ask what this trade reveals about you. What behaviors repeated? Which deviations are consistent? What emotions show up most? What beliefs drive these actions? And what must be eliminated or reinforced? This is where maturity forms. This is where the intentional trader is forged. When these layers operate together, your journal becomes a blueprint of your internal architecture. You will discover patterns, entering too early when anxious, holding too long when hopeful, sizing too large when angry, exiting too quickly after a loss, avoiding valid trades when fearful, ignoring rules when excited. None of these behaviors are about strategy. They are about structure. Your journal exposes the real reason you're inconsistent. Your actions do not match your model, your emotions override your design, and your structure collapses under pressure. The good news is once you see it, you can never unsee it. Visibility is the prerequisite for change. Your journal turns invisibility into awareness. Awareness turns into repetition. Repetition turns into mastery. Mastery turns into identity. That is the pathway. That is the transformation. That is intentionality. Pause this recording if you must. Reflect. Ask yourself, what behavior keeps repeating in your trades? What emotion shows up most during execution? What pattern do you keep rationalizing? What deviation do you always excuse? What truth have you avoided writing down? Do not judge, observe. Judgment punishes, observation transforms. Your journal is not a courtroom, it is a classroom. Every trade teaches you who you are becoming. Every entry is a lesson in structural psychology. Every deviation is an invitation to rebuild. This is mentorship. This is transformation. This is the doctrine of intentionality. Journaling works for one profound reason. Behavior follows exposure, and exposure destroys denial. Once behavior becomes visible, it becomes modifiable. Once patterns become undeniable, they become interruptible. Once deviations become traceable, they become correctable. Trading is not an art of predicting markets. It is the discipline of understanding yourself within the market. The market tests nothing except what is already inside you. Your journal becomes the instrument that reveals your impulses, insecurities, emotional cycles, inconsistencies, structural strengths, internal weaknesses, and hidden progress. This is why the intentional trader journals, not to remember, not to record, but to see. If key point 1 taught you that memory-based trading is blindness, key point 2 reveals the cure. Your journal is the lens through which blind traders begin to see, not the market, themselves. Because the real transformation in trading does not happen on the chart, it happens inside the trader. Your journal is the instrument, your behavior is the content, and your structure is the solution. Without structure, you're gambling. Rebels, we've dismantled the myth of memory. We've exposed the journal as your behavioral mirror. And now we reach the truth that separates the intentional trader from the perpetual struggler. A truth so foundational that most traders spend their entire careers avoiding it. Without structure, you are not trading. You are gambling with confidence. Let's walk through this with clarity. Think about the way you enter the market. How many times have you taken a trade without full confirmation? How often have you justified a setup you never planned? How many times have you chased a move simply because it looked right, exited because a feeling took over, sized up out of excitement, or smoothed over a deviation you knew was wrong? Every one of these moments is gambling, not the dramatic casino kind, but the subtle behavioral kind that destroys traders quietly. Gambling isn't defined by placing bets. It's defined by acting without a defined structure and accepting whatever outcome appears. That's what most traders do daily, not because they want to gamble, but because they never built a system strong enough to override their emotions. Structure is the only antidote to internal chaos. A gambler reacts before thinking. Their entries are nervous system responses, not decisions. Their reasoning shows up only after they're already in the trade, and their success depends entirely on the market cooperating. If conditions shift, they crumble, not because the market is hostile, but because their internal architecture is non-existent. And the psychology is always the same: certain before the loss, confused after the loss. Gambling traps traders not because they lack intelligence, but because they lack measurement. And without structure, nothing can be measured. Without measurement, nothing can evolve. And without evolution, nothing can transform. Structure dominates everything. It dictates how you enter, why you enter when you stand down, how you size, how you handle risk, how you interpret randomness, and how you respond under pressure. It becomes your identity, not your tool. A trader without structure cannot be consistent. A trader who improvises cannot be probabilistic. A trader who trades by mood cannot advance. Structure converts randomness into probability. It turns chaos into sequence. It transforms possibility into expectation. And this is where you must confront a difficult truth. The market cannot hurt you. Only your behavior can. Structure protects you from impatience, from emotional expectations, from premature entries and false confidence, from the need to make it back, from exits driven by fear, and from the impulses that sabotage consistency. Without structure, emotional trading becomes your default. And emotional trading is gambling, just with better vocabulary. Let me test your reality for a moment. If you removed hope, fear, and intuition, would your trading system still function? If someone else followed your rules exactly as written, could they reproduce your results? If volatility changed today, would your system hold, or would your emotions take over? If the honest answer to these questions is no, then you don't have a system. You have a style of gambling. This is why most traders fail. Their approach is not transferable, scalable, or repeatable. And what cannot be repeated cannot be mastered. Here's a truth almost no one tells you. A win without structure is more dangerous than a loss, because it validates a behavior you never earned and convinces you that your impulse is intelligent. That's why many traders blow their accounts after their best week ever. A structural win reinforces discipline. An unstructured win reinforces delusion. Fear reacts. Discipline responds. Fear guesses. Discipline executes. Fear blinds. Structure illuminates. This is the identity shift intentional traders undergo. Structure is not optional. Structure is not a cage. Structure is freedom. Freedom from chaos, fear, and the self-sabotage that hides inside your instincts. Probability rewards consistency, not intelligence, not excitement, not confidence. Pattern repetition is the only currency probability respects. A structured trader becomes predictable to the market, not because the market knows them, but because their behavior aligns with mathematical expectation. This is why you cannot command probability without structure. You cannot scale without structure, and you cannot grow without structure. You are not losing because you lack potential. Your potential is simply unstructured. You are not inconsistent because you're emotional. Your structure does not yet govern your emotion. You are not blind because you cannot read the market. You are blind because you cannot yet read yourself. Without structure, you gamble. With structure, you design. With design, you command probability. And with commanded probability, you rise into intentionality. Rebels, this is the doctrine. This is the path. This is the calling for every trader ready to stop reacting and start architecting. You cannot trade from memory. You cannot grow without a mirror. You cannot succeed without structure. So now the responsibility is yours. Will you continue trading blind, comfortable in familiar dysfunction? Or will you begin the transition from gambler to operator, from guesser to designer, From reactive trader to intentional architect, your future is built by the structure you enforce, not the desire you feel. Here at Intentional Trading, we build that structure, one doctrine at a time. If this confronted you, clarified you, or exposed something you've avoided, subscribe, share, and revisit the earlier episodes. Transformation is a sequence. Don't break the sequence. Prepare for episode 5. It will challenge your identity and force you to choose between the illusion of impulse and the discipline of design. Welcome to Intentional Trading, where structure replaces hope and intentionality replaces emotion.